Hey, good morning, everybody.
Good morning.
How is, good morning. How is Chicago area? I think that's where you are, aren't you,
Chicago was
Miguel?
nice and sunny today. It's
Yep.
Nice.
gonna be 60, 70.
Oh, wow.
Wow.
We had 90s yesterday. Probably again today. I'd figure that'd be heading your way.
We'll take it.
All right. Yeah, it's better than snow and ice, that's for sure.
Oh,
Oh,
right. Well, Mark, you want to get going?
yeah, let's rock and roll here. Well, here we go again. And we're um, kind of flat to up a little bit. The NASDAQ is taking off. When we look at the charts, we'll see why the NASDAQ
That's what it
and the SPY. And you're seeing that the mags are back. People are buying back in, and this has been an interesting week um, for stocks and news. And again, it just shows what the news has done. We talk about market structure, and markets have a flow, okay, and markets have a feel to them. And I can put out a trading guideline, and I can put out potential swing trading stocks in three different categories, but you still have to have that market feel and that market flow. And I'll show you a little bit, about how I think about that. And that can't be taught really. That has to be experienced, and that's why, when you get into swing trading or investing, you have a theory about something that you should test it out on a paper trade basis, so you don't lose your capital, and so that you can also pick up that flow, and that flow is like this week, and when I put out a list, let me go to it here. Okay, so when I put out a list over the weekend, again, I don't know what's going to happen, and I don't know that at 3 a.m. on the Sunday before the market opens that China and the U.S. are going to have a deal, and that's going to relate to, or maybe they don't have a deal and everything dies. Okay, so you take what you have, you throw it up against your trading or investment plan, and then you make a decision. But you make a decision based on flow and based on market structure, and when you look at charts, from a point of view of Monday, we had, the Dow went up over 1,000 points. Okay, everything gapped up. So then you've got to change your thought process. Say, okay, I have a list of probable, swing trades or investments. How does this affect my trading plan? And you have to look at it that way. And is it still a good time to get into any of these? Are the setups still the way they were, 24 hours before this news came out? And so that's the stuff that I can't really teach that. That's part of the flow, and that's the part of being in the market. And I've been in markets for 40 some years, and still learning. I'm still learning flows. Can you shut that down if you can? So anyway,
Yep.
we have these lists, we have the charts, and this is as of close on Fridays. Okay, and I play off these lists. That's how I do it. I don't go out and try to look for new ones every single day. I do weekly by weekly, and I get these charts in.
It's 8.
And that's how we play it. So again, and other things that happen. Other things that happen, such as economic news and inflation rates, and that still plays into it too. So, when you look at a chart, it's not just the chart. I mean, the chart helps you determine, but what is a chart? A chart tells us basically we're making inferences. I don't have it up yet.
Oh, okay.
Yeah. The chart shows us we're making inferences. I'll put one up. About what the future may bring. And what we're using moving averages, we're using oscillators, we're using support and resistance. And where does that come from? That comes from past data. Okay, so on a moving average, this is 200-day moving average. It takes the past 200 days averages it up and puts a point on the line. Same, this is the 9-day, this is the 50. Okay, oscillators use the same thing. They use data from the past to predict or pretend to predict the future, help you predict the future. So again, that's part of it. It's not just putting a chart up saying, oh, this chart's telling me this. There are other things out there that affect charts. And if you look, like here was Friday, okay, we're under the 200. This is the S&P. And then all of a sudden the China deal is out. Last Friday, Goldman Sachs said 85% chance we're going to go into recession. Boom. Okay. China deal comes out. We gap up above the 200. Okay. Now Goldman Sachs says yesterday, oh, the S&P is going to end up at 6,500. So they went from recession to 6,500. Okay. And these are the people we're supposed to be looking at, are supposed to be helping people make decisions about what's going on. And it just tells me they don't know what's going on. So if you look at the S&P 500, here we are, second day up above the 200. Now, people have asked, should I get into the S&P 500? Well, I mean, that's really up to you on your risk factor and your trading or investment guidelines. If you're Paul Tudor Jones, you looked at this and you said, I'm going to wait a day and see what happens. Okay, next day comes up, we're going to open a little bit higher. You've got some sells, above it. I'm going to invest in this. I'd zip over. He may look over at the weekly, looks and says, okay, yeah, we're over the 50 finally. I want to see, maybe he'll say, I'm going to wait until the end of the week and make sure that we close above the 50. And then that will give me a go sign to say, look, I'm going to get back in an index fund and invest. Okay, as a long term, because you can go back on the charts and you can see what happens. Let's go back to the daily. Okay. And we've talked about this, lots. Here, we'll go back 2 years. Okay, here's the 200 daily. Okay, again, we talked about it. When this went over the 200 back at this point, okay, it was at 434, and that was in 2023. And it didn't cross back under the 200 until 2025 in March. Okay, you basically would have had one trade to get to this point and one trade to get out. So that's a long-term philosophy, Paul Tudor Jones. It's not mine, okay, but it's something you can use. So is it time to get back in on an investment? Well, it depends on your risk management and your trading investment philosophy. Go back, study this, and figure it out. Don't wait for someone like me to say, yeah, get in, yeah, get out, buy here, sell there, because I have a different investment philosophy. I have a different risk factor. So I'll show you a few more things as we come up, but let's get through, some of these charts. So this is good. This SPY above the 200-day looks like it's going to keep going. The Dow, okay, just under the 200. Okay, it came back down yesterday. And again, you've got this line of resistance above it. We've done this before. It's got to significantly get past that and move up. What happened yesterday in the Dow? Well, we had United Health. United Health, one stock, took the whole index down, and that will happen. Okay, charts can't predict that. You can't predict it for the most part, but in this chart, it did have this resistance level. So if I'm looking at this, I'm like, am I going to buy in that close to a resistance level? Well, not according to my trading guidelines. I wouldn't. Some other people may have a higher level of risk. They may want to just ignore it and say, look, there's some sell orders up here. I'm going to try to go up there. It's following the Bollinger Band. It's up to your individual risk tolerance and how you look at charts and how you interpret them. Let's go to the Qs. The Qs are really, following the mags, and so is the S&P again. So here we are humming along right along the 200, can't get past it. All of a sudden we have a China deal, and which, is at 90 days, of a cooling off period, and we're off to the races. So here's 2 days over the 200 again on the Qs. If you want to get into Qs, I mean, well, Paul Tudor Jones might say, yeah. You might also say, well, there's this resistance level up here. Is that going to stop me? Do I buy on the Bollinger Bands? Okay, I personally don't like to buy on an upper Bollinger Band, okay, because 5% of the time is when it trades outside of that. And so again, your risk and your reward. Your risk is coming down back to the 200 and under. That amount is your risk. Your reward is going up to the next level of resistance, which is right here. Okay, so you have to decide on your own what is my risk tolerance and what is my risk management plan? I look at this, I say, well, for the amount of money I would put in here, if it's a trade, it's not worth my risk right now. Okay. The reward's not there until this goes. That's how I interpret these charts.
One thing on Mark, one important thing is like, are you investing to hold on like you do for Berkshire because you believe in that company? Or are you trying to swing and hold it for a shorter period of time? So
Well, I'm
like
looking
I
at,
go in with that thought process.
well, I'm a swing trader. Okay. So I'm trying to go back and because people are asking about investment strategies. If you're an investor, okay, again, which philosophy are you following? Do you believe
Right.
Paul Tudor Jones? Okay. You may want to get in here. But again, I personally, because I've been in this for 4 years, I go back and I'll look at a weekly. Okay. And I look at the 50 week just for verification. And I say, okay, well, look, this is pretty good on the weekly. I want to make sure that this closes above. Now I may take a risk. It's Wednesday. It's going to close above. Nothing's going to happen because we don't follow any news. And you may get in here and you can go back on these charts too, weeklies. Okay, here's your 50. Okay, and the reason on a weekly I'd use a 50 is because, it'll get you out sooner than if you're waiting on the 200. You're still in on the 200 week moving average, but I always like to use the 50. That's a pretty good gauge for me. So now you see we've gotten in, well, way back here, if you're over the 50, if you just use the 50 on a weekly, and now we're seeing one above. So if your philosophy and your guide and your investment strategy is I'm using the 50, then you would say on an investment basis, I may get in here. Not financial advice, but you have to have a plan, when you get in and when you get out, even on investments. So that's a good question, Paul. So if I'm swing trading, I'm probably not getting in. If I'm investing, I'm seriously considering it, and you have to have that mind frame. And I think we get confused sometimes on that, when we're trading or we are investing. Okay, I'm pretty solid on mine. I'll swing trade Berkshire, but I have a big position I've always had. I have a big position in MicroStrategy, okay, that I don't sell. Okay. It's long term. Now, if it went down and hit one of these, indices, I might consider selling my investments, but they haven't. They've been that long. I can show you the Berkshire chart, goes back forever, and the MicroStrategy goes back a couple of years for me on when I got into that. And same with Bitcoin's another thing that I invest in. Okay, I don't invest in too much, but I also look for these indices. If you have money, a lot of people work on the indices. I have people who call me and say, my 401k, should I manage my 401k or just let it sit? And I said, well, that's up to you. And I tell them, this is what I look at. I look at the 50, or you can look at the 200, get out, get back in. And you're not doing it every day because 401ks do not let you to day trade or swing trade in their accounts. They just don't. So anyway, I'm kind of taking up a lot of time here, but I wanted to just kind of make that known. But what's happening, you can go to the mags. Here's the mag 7. This is the ETF. You can see what happened. This is on a weekly. Even the mag 7s have come back up after several weeks under the 50 and pop back up. And let's go look at the daily, for maybe a swing trade here. And I'm going to go back to, you can see on the daily, it's been above the 200, dropped below it, and now we're above the 200 again. Let me get closer. You see, we're 2 days above the 200. This is the mag 7. Okay, you got some room to run. Do you like to run or buy on the upper Bollinger? I personally do not. Some people like to. They like to run that momentum as far as they can. I like to, get in more towards a support level, which would be the 200, followed by the 9, and then try to get it back up and ride that up. This is what we're dealt. This was Friday. This is Monday. Okay. If I was looking at this, this would be under the under 200 list Friday. And then Monday, all of a sudden, it's on the watch list. It's above the 200. It gapped up, and here you go. So again, charts on Friday look different than charts on today, and it's because of news that bumped that up. So charts are definitely in technicals. I love technicals, but you got to have a feel and a flow, and understand, should I get in or should I not? So let's just say this was on the under 200 list. Then all of a sudden, Monday morning, we open up here. You just missed all this opportunity in here. you skipped right by major resistance right up to a Bollinger Band. So, Monday you have a decision. Do I buy in here? Okay. Or do I wait and follow my trading plan, or my investment plan? So if I'm trading, I'm like, I don't like to buy in the Bollinger Band. So I would not have entered a position on the mags, even though it's going up, because I stick to my trading guidelines. I know the flow. I know that 5% of the time this is going to come back in. I know this was news driven and that another news story can come out and dump it just as fast. A lot of people are in a FOMO situation right now, and you just got to be careful of that. And with that, I've taken up 15 minutes of time. We'll go to your charts when you want to go, to your charts. But if you are already
Jesus.
in a position, I mean,
Geez,
like,
Mark, would you have your early morning coffee already? What happened here?
yeah.
Dude, what's
Well, I mean, if you're in a position like ILNQ, we've had this position on, for 2 weeks, and it's just, this is perfect. Boom, up to the Bollinger, down to the 9, and we're still in, and we're up, $6.42, and we're not swinging in and out of it. We've been in it for a while. This is during this whole time. These are what I'm trying to look for. So you stay in there and you manage those. You don't enter new positions based on my trading guidelines when you know that the market is the way it is on my guidelines. AVGO. This is another one that we've had on the list for a while. Okay, right here. AVGO. You can see what happened. Boom. Here it went up, and you're like, okay, I'm in this position. Okay, this was where we put it on the list. When it hits up on Monday, you have a choice to make. Do I get out or do I stay in? Okay, that's up to your personal guidelines. You could have got out if you stayed in. We are up, since we put it on the list, $36.67. Now you may say, okay, when it hits this level, this is where the sell orders are. I'm going to take some profit. I may take half, I may take all. Okay, but that's how you got to kind of look at it. It's not everything on the list is a buy, and every day, Friday is not like Monday. The market conditions can switch, especially with this administration in there. It switches hourly, and so it's a different sort of game that we're playing. But like Trent has said, risk management is really what we got to do. But there's ways to make money. Look at this. We've had this in. This is the same situation as every stock that we had, but we were in based on trading guidelines, and you could still be in. And we looked at last week. We looked at. Sorry, I'm on a rant. We looked
You're
at we looked at 3M.
It's
Okay.
passion. It's passion.
And
Go ahead, Mark.
we said we'll get in right here, and then we're above the 9, we're above the 200. We have we're within the Bollinger Bands, and then boom, Monday, they came right up. So like Margaret did with Boot, I would have said I'm out at the resistance level, and that's where we are for the last 2 days. This is a hard line for me. I would have got out. 3M, I'd have made $9.24 on that trade because we were in. Okay. But again, if you were looking at this to get in, would you have bought in here? No. Let's just say it went on the list Friday or Sunday, and then Monday happened. No, I wouldn't have bought in at this point because of market conditions. So you let that one pass. It's on the list. Okay, until something changes, I'm not going to buy in. So anyway, sorry for the rant, guys, but I want to make sure that you have an understanding that when I put these lists out, the market condition can change like it did, and then you got to reevaluate. But you reevaluate to your trading guidelines or your investment plan.
I think that payment should maybe later ask a few questions, directed questions. I think that'd be great. Just straightforward direction, because I think there's a little bit of a misunderstanding there. That's all.
Yeah,
Not a
we
misunderstanding.
will.
Just, yeah, cool.
Let's get with Trent, and then if people have charts we'll look at, and then we'll take some questions. So.
All right, so we've been talking about risk management, and today we're going to focus on calculating stop losses or trailing stop losses. And so I'm going to focus on 3 areas. Mark really hit upon my third one, and that's
we didn't
support
talk before either.
No, we didn't. And that's support and resistance levels. First one is a fixed percentage, and that's where you decide that, say, 5% or 10% is what I'm willing to lose and get stopped out at. And it's simple to implement. It works well with stable trends. So say a company like Berkshire, it's not too volatile. It's stays within a pretty easy range, and the chances of getting stopped out early are are minimal. It doesn't incorporate volatility. So if you used a 5 or 10% trailing stop on a company like NVIDIA or the Mag 7 in general, there's a very good chance you get stopped out earlier than you actually wanted to. The second one is ATR, or which is a volatility-based indicator. It's the average true range of a stock, oftentimes calculated on a 14-day period. It adapts to an asset's price swings. It reduces premature exits in volatile stocks like the Mag 7, NVIDIA, and so on. It's more sophisticated risk management versus a fixed 5 or 10% trailing stop. But it also requires some understanding of technical indicators, and it's less intuitive for most beginners. And then third is support and resistance. Mark talked about this, determining on a technical level what the support and resistance level is based on your time frame. If you're a long-term investor or short-term investor, are you looking at it from a 5-minute chart or a monthly chart? That's another way you can determine that. So this morning I decided while I was drinking my coffee, I'd throw together a calculator on the 5% or 10% loss levels and ATRs. And so I used, for instance, SPY here, had a closing price yesterday of $586.84. With a 5% stop loss, you would put your stop loss or trailing stop loss at the price of $5 or $557.50. Or if it was 10%, you put that 10% trailing stop loss at $528.16. Now, if you're using Berkshire or something like that, or S&P, which is more predictable versus, did I freeze?
No, you're doing,
Uh,
no, it's,
you're freezing, but we can hear you.
Okay, can you see my chart here? My
Yep.
calculator?
yes.
It's
Okay.
well, it's the S&P 500 ETF Trust stop loss order calculator. That's what's up.
Perfect, perfect. Okay, now if you have a more volatile stock, such as the, let's say NVIDIA, I may have a bigger stop loss order, or based on, did you see that change?
Yep.
Okay. You may see a bigger trailing stop based on the volatility of NVIDIA. So in a ATR, or average true range of that stock based on a 14-day period of time, at 2 times that ATR is $3.74, you would have a stop loss at $122.45, or a 5.76% trailing stop. Now, if it was calculated more on a 3 times ATR, your stop loss would be at $118.71, or 8.67%. And this is something you can apply both to a daily or a hourly, or whatever your time frame is. And if you're like, for instance, if you were looking at it from a long-term investment or intermediate term period of time, you calculate the ATR on for instance, on a weekly chart, and it would give you that number, and you can go into things like trading views and put an indicator, the ATR indicator, and it'll give you that week's ATR. You take that highest number there, you multiply it times 2, and that would then subtract that from your weekly closing price, and that would give you the bottom side of the trading range. If it was a very volatile stock, like let's say Tesla or something like that, you may want to multiply it times 3. But this gives you depending on the volatility of a stock, or the period of time that you want to use that position, or that you're going to hold that position, there are 3 different ways to create these trailing stops. And I think this is really important today, because we have seen such a big move in the last 2 weeks on a lot of the S&P 500 in particular, but the Mag 7 or the higher beta stocks. I was looking at SoundHound, and I remember it was a week ago we were talking about, somebody asked about SoundHound, and it was trading below my intermediate trend. It was trading below my trade trend, and today it's like way above it. And to me, that's a major spike in that movement. And so if I bought right at the intermediate trend or right below it 2 weeks ago, I got a sizable gain. I don't know why this is blanking out. And so with that in mind, you may want to put in more of a ATR calculation on that stock, and calculate that risk tolerance to it. So this is all to preserve capital. And as we all remember, if you want to be at the table and you want to stay in the game, you got to keep preserve capital. And this is 3 different ways you can calculate that. I'm going to write a little bit of a summary of this and put this, send this out in email, but also post it up on the website as a part of our educational side of things. And I'm actually going to apply this to Kerry's list and the automatic calculations of trailing stops, so that when you get that, you can see here's an idea of how to place your trailing stops behind some of Kerry's ideas. So let's open it up to the floor, look at some charts, and discuss anything you're interested in.
Let me address, I don't know if Payman's still on. He said he had some honeydew list. He might be off. Is Payman still on? Oh, there he is. He's still here.
Oh, I was gonna say he knows his priorities.
So yeah, he's got,
Yeah,
so
well,
my dear wife is
Payman-
keeping me preoccupied with her honeydew list. So Payman asked in the chat, are you suggesting that the weekly chart of the 50-day moving average works as a moving strategy? And I say, for some people it does, Payman. I mean, go back. I've had to go back and study. I got books and books of traders, okay? And each one has their own method, okay? And so when you're starting out, you're all confused because I'm like, well, if you go through what I do, you try to use everything and put them all in one and say, I'm going to do this. And then all you have is a hodgepodge of oscillators and moving averages and this indicator and that oscillator, and they all tell you different things. And then you're really confused. So I took it down for me personally to my trading guidelines, okay, which are 4 moving averages, 3 oscillators, Bollinger Bands, and a support and resistance level. And that's what I use. That's what I'm comfortable with. Other people like Trent has he has others. He uses moving averages. He uses different moving averages than I do, which is fine. You're going to find people do that. With the 50-day, I found that a lot of traders, good traders, or the 50-week on investments will use the 50-week. Okay, and so I just go back in time and I look at the 50-week to see what it looks like, and then let me put one up here. Okay, I'm going to go to the week, go on the video, and I got to make it a little bigger than that. Okay, I got some lines in here, but this is the 50-week moving average. And like the 200-day moving average, this, when you go to a weekly investment, you don't have to be, you're not going to have the same in and out volatility that you might have on a daily chart. Okay, so here's the 50. You can see all the way back. We crossed the 50 right about here. This was in 2023 January at $20.37, and we ran that 50. Oops, get my chart to move all the way to about right here, and that is in March of 2025 at 112.69. Wow. Okay, so people will say, I watch the weekly. You know, I also watch the upside, and I watch for resistance levels up on the upside, even on the weeklies. But that has been a method people use. Now, is it something that you should use? You know, you're looking at the same chart I am. Now, can this pop back down below the 50? Absolutely, you can. Okay, you want to have conviction. You want to look down, make sure your oscillators are good. You know, but it is one method. You know, the other method, and we've talked about this on the daily, is the 200-day moving average right here that Paul Tudor Jones talks about. And on this one, you know, let me back this up. I think I've already used this as an example. Oh yeah, here. This is where it crossed the 200-day as I push this out at about 1563 back in January of 2023. And that got ridden all the way to about 123 and change on January of 2025. So about 2 years.
Yeah. that's
Okay, on the
impressive.
daily. Now, however, this has been one of those stocks, has a lot of volume, has a lot of people interest in it. But back here when it wasn't, okay, you might be crossing the 200 left and right all the time, you know. So that's when you may want to go to a weekly. But it worked for Paul Tudor Jones. It worked for him during the great financial crisis. He was in the indices like the SPY, which is not coming up for some reason. Here we go. He used it on the SPY. Let's go back 5 years on the SPY. And you can see it works better here. You know, you get in, you get out. Didn't see how it touches on it? Didn't get in. Touches on it, comes back down, gets above. So you're going to have some issues like this on daily charts where, you know, you're in and out, you know, but then when it runs, you usually do pretty well. Then you're out, you're back in. So that's what he uses. Okay. Is it something you could use? It could be. Maybe you use a different moving average. But you know, it's really up to you. I can't tell you which one to use. I tell you the ones that I would look at. I would look at the 200 and then I'd look at the 50-week, you know, and then make an inference based on your investment plan and, you know, and watch it as it crosses back over the 50. Is it going to stay there? If it crosses back over the 200, is it going to stay there? You know, and, you know, be prepared in these types of markets. If you're trying to invest, you may have to pull out of those too, to avoid another dump like we had, you know, just recently. Did I answer your question, Payman, or did I just make it
Yes.
all
No, you
worse?
did. That's fine.
Okay.
Payment, I
Yeah,
would
thank you.
also, one of the things that comes important is you don't
Sure.
look at a shitload, don't look at a lot of stocks. Just pick a few of them that you have conviction on. You know, maybe, I don't know, could be 3, could be 6, could be 10, because that makes it really
Right.
confusing. And
Yeah.
then
Yeah,
the other
it
thing
is.
is like, you know, what stocks are you looking at? So maybe like what one do you have in mind? Says, if I had to pull the trigger, I'd pull the trigger on this. You put it up or send it to Mark. He'll give you his ideas and thoughts. Because I know a few years ago when I started doing it, I'd give him a bunch of ideas and he yay or nay. You know, you get but with that feedback, it helps a lot.
That's not
Yeah.
a bad idea. Thanks.
Yeah. So are you looking at anything right now? I mean, right
Like
now
I said before, I'm laser focused on Kerry's AI list. Those are the only stocks that I pay attention to. I have conviction that they're going to go up very at much higher level than other stocks, and they're the growth stocks. So those are the ones that I pay attention to. And basically, I'm trying to use swing trading technique to figure out the lowest possible price that I could be buying those for investments.
swing
I
trading
may do a
doesn't
little
grab
bit
the
of
low and
swing
the buy though.
trading.
I mean, Mark, you may want to comment. You're not looking
Yeah,
for the high and low on swing trading.
Yeah,
right.
we're kind of like we're bunting singles and doubles, you know. So, you know, technicals can tell you, you know, Kerry has a stock XYZ. Okay, let's go look at one here.
Payman, what's one that you're looking at? What's one that you constantly go to? And
Iron is the one that I would like to look at.
Hey, that's the
there you
one I
go.
just put up. That's the one I already put up.
Look at that great one.
Yeah,
I know. So look on the swing trade here. Okay. Uh, you know, I look at the 9. We're under the 200. So now we're under the 200 list. So I come down here and I would have looked at this chart and said, okay, here I got a candle close above the 9-day moving average. You come down, the oscillators are moving up. I'm a little low on the RSI, but that's okay, you know. And then so if you popped in there, you're in on a swing trade. Okay, and you might have gotten out here, but you do still have, you know, you're still touching the line. Some people are
okay.
religious about only I'm getting out when it's below that line in a full candle. If you got out, you might have got back in here. Now you're above you're above the 50, you're above the 9, you're above the 20, and off to the races you go. You know, but you're outside the Bollinger Band. But this is on a swing trade. You're talking about
Correct.
you know, an investment. So I'm just going to go over to the weekly here.
I do both, to be honest with you.
So on an investment, okay, you know, if it's a long term and you have conviction, you know, I want to get the best price available. I don't want to get the highest, but if I was doing like the 50, I'm not even at the 50 yet. Okay. On Irene. Um, so, I mean, you look at that and you say, you know, I want to get above this 50.
Right.
If
So
that's the
you'd stay out
philosophy
now.
you use for a
Right.
long-term trade, or, you know, we go back and we say, you know, on an investment on the daily, I'm going to be Paul Tudor Jones, and I'm going to wait for it to hit the 200. Okay.
Yeah.
You do have some
Yeah.
resistance up here, but let's go back
Yeah.
and look at Irene for 2 years and see what it did on the 200. Pull this over. Okay. So this was this, if you're using the 200 investment, you'd say you got in here and you got out there. So you made a little bit on that,
Yeah.
you know, and that's an investment unless you're swing trading it. Okay. Then you would have gotten out at any one of your resistance levels, and then you're out. And then here's the 200 again, gets you up, gets you back. So it gets you a little bit higher. Okay. And then this is what I was talking about, the chop in the daily chart trying to invest. Sometimes you get, you know, this swing over the 200, you're in, you're out, you're in, you're out. And then you have moves like this. But again, you got in here, you get out here. So you made from this level to this level on your investment if you're doing that. Okay. So again, we're in all the way up, down, and out here. So you went from here to here. Okay. Some people would say, well, why don't you just stay in? Because it went up anyway. Well, because of this. You know,
Exactly.
this got you out. This got you out. You would have, you know, if you hadn't used some kind of metric to get out, you would still be in down here. And so your investment, you would be right back to where you were, you know, in September of 2024. So, you know,
Okay.
it's a philosophy. These single stocks, you know, this 200 seems to work a lot better on indices, you know, and maybe the Mag 7 type things as these smaller stocks, you know, maybe not as much.
Right.
But
Right.
again, it did work, you know, but you got more chop here, payment. You'd be in and
Right.
out, you know. So if you're long
I see
term
that.
and you believe in Kerry and what Kerry's doing, I mean, find a spot you feel comfortable, you get in. I think, does Kerry's tell list have a like an entry point at all, Trent?
No, it doesn't.
Okay, so you use this,
This
and
is
maybe you use the 50 or the 200, or you know, the 9, and you get in, and it's a long term. And Kerry has a target price, right, over a certain amount of time,
Right.
yes.
and you let it run if you have conviction in that. And you know, he's done all the work. You can go look at all his work. I mean, it's pretty extensive.
That's why I follow his stocks.
Hmm.
He does all the work and I just follow it.
Yeah, I think though, it's more fun if you learn what he's doing and like learn these things like you're trying to do, because then you have
Right.
a higher understanding and you make better decisions, I think.
Right. That's where the deep dive and all that stuff comes in.
Yeah.
Yeah. Good.
So
You're using it that
and I
way.
would I would take a piece of paper and say, start with 10,000 paper trade dollars, and I'd pick a stock like Trent said, and either use my guidelines or use your own or use the 200 or the 50 and just see where it's at and see how much money it makes you on paper before you, and that way you get that feel and the flow of the market that I can't teach you. You know, and
Got it.
everyone has a different feel for the market. Paul has a different feel for the market than I have. And it goes back to your risk tolerance and your risk management plan.
Ask
Sounds good.
questions. Continue to ask questions.
Yeah.
I give
And
you,
you
I give you
use,
credit. I give you credit
Okay.
for commenting yesterday. That was really good.
Thanks.
yeah. And that's what this forum's all about. Ask questions. We got a lot of people with a lot of different ideas uh, and a lot of experience, both in making money and losing money. And I'm on both sides of that. And, you know, all we can do is tell you what we know. And then it's really up to you, you know, because it's your money. You know, I learned long ago that I cannot use investing and trading as a casino. I have to actually, I got to be the house. I got to be closer to the house and have my own rules and get out, you know. Otherwise, you're just always treading water or you're losing money like Trent was trying to show you yesterday. Okay.
Okay.
Wow. Okay. Anyone else? Anyone got a question for Trent so I can drink my coffee?
I've got a question on SMCI. It just keeps
SM.
going up.
Okay, let's take a look.
Only for really one day though.
SMCI.
Well, we got upgrades of Carlisle, a TD, and KKR.
Can you shut that off a little bit, Trent? Okay.
Yeah.
So let me put this up. Share. So SMCI has gone up one day, basically. Okay, this big old long candle. I don't know what news came out or was just following the market. You've got a hard, pretty good resistance level at the 200s coming down. You've got a spike in volume. You were at 51 million and yesterday was 96 million. Okay. Your oscillators are looking pretty good, but you got, you're outside your Bollinger Band and you got resistance at the 200. So, there's your upside resistance. Downside, you got support, it'll be at the 50. And after that, it's going to be at the 20. So I don't see that. I mean, you made the comment that it keeps going up. But if you go back on the chart, you see we pretty much, I like to box these things in. We pretty much have been going sideways a little bit. And then we had a bit of a breakout above yesterday, and we're going to see this 200. Can we get by the 200? Let's go back and take a look. Here's the last time we hit the 200 on this stock. It did make it over. Then earnings came and dumped. So, that's what the chart tells you. The chart doesn't tell you what to do. The chart just tells you, look, danger. Okay. But if you can get past that danger, you got some people up here that have some sell orders at 42.15. If you get past that, I'm going to look, I'm going to change this to medium. And then all of a sudden the sell orders go above the intermediate resistance line. So you've got basically two levels of resistance above you before you get to resistance. You've got momentum going. You're over the 50. You've got the stochastic going, and you've got the MACD moving in your favor. So yeah, it's definitely up, but we're up to where? What's your risk? Okay, let me get rid of this thing. Your risk is falling back down to support, either the 50 or the 20 or the intermediate support. Your reward would be to go up to the 200. And if you can get past the 200, we already went back and saw it did get past it, but how long will it take and will it get past it at all, in these markets? Why did this volume go up?
Mark,
almost double. Yeah.
Raymond James rated it outperform yesterday, and the extended hours, at least right now, is at 46.
Okay. 46. Wow, that's quite a jump. So that's based off of Raymond James.
And yesterday's meet in Saudi Arabia, that kicked all this, grabbed all these AI stocks like crazy up.
Yeah.
I'll take a look at Walmart.
Walmart. Okay.
I think earnings is tomorrow, Walmart. So, and also I want to share my experience with Walmart. I know it's Bob is saying, everybody's saying, the delivery they're doing is so good. So I ordered something in the night at 9, 11, 10 p.m. and the orders came in the morning, 11 a.m. So, as Trent is saying, they have so many warehouses. So, so their delivery is so good.
So you said earnings is tomorrow?
Yeah, tomorrow.
Okay. Me personally, and you guys have heard this a million times, in a swing trading position, I exit my position prior to earnings on swing trades. Now, if you're an investor, you're long term, you don't care about that earnings. Okay. For me, I don't know what's going to happen with Walmart, but it seems like every time earnings comes out on any stock now, it either goes up 15% or down 15%, based on what it is. So at the point you're looking at, do I want to risk 15% if I'm up on a swing trade, or do I want to take my profits and wait for that? If it goes up, then I'll come back in at some point. You're not married to the stock. I could care less about Walmart. All I care about is making money off of Walmart on a swing trade. And so that's why I have rules. And, I could be wrong. But if I were in Walmart on my guidelines and not financial advice, I would be out today. Of course, on this chart, I would have been out right here. Okay, I've been riding this up until it hit my resistance level. That's when I get out. Now I see it did come back up, but where did it go up to? Right to where the sell orders are. And you see this a lot. You know, when the sell order guys, when they put them in above the resistance level, you'll see it go up, touch it, and then come back down. And that's what I'm seeing. So Walmart, I would have been out here on my guidelines and waiting for earnings. Now, had it not hit this line wasn't here, and earnings was coming, let's say we're here and earnings, I'd have been out, you know, day before earnings. That's my guidelines. Now,
Okay. Yeah.
that's you gotta, you know, and some people stay in, they, you know, they roll the dice. And then sometimes you're rewarded 15%. And then you got to decide if it goes up 15%, do I take profits or am I an investor? I'm talking swing trading. I want to take the profits, you know, as much as I can.
So Paul asked about Iran's earnings are today. Would you wait to buy? I think that's you know, based on Mark's philosophy or process, you wouldn't be in this right now because you don't know what's going to happen.
It's today's earnings.
Yeah,
Yeah.
are you a trader or you investor? That's the first thing I'd ask.
Yeah, I mean,
Yeah.
I know exactly what I do because I go to my trading guidelines that tell me to
Yeah.
get out. So
Yeah.
that's what I do. No
Now-
emotions, no emotions.
Now, if you're a speculator, you would play both sides of this because
Potentially,
because it's a crypto related company. You look at all the crypto related companies in the last month, they've all have profited from Bitcoin going through the roof. So from a speculation standpoint, there's a really good chance they're going to say something positive about how Bitcoin is going up and crypto is going up, and they're going to get a pop. Does that mean it's sustainable? You know, over the next quarter, who knows? If you look at the chart on Bitcoin, it definitely showing signs of exhaustion because it keeps bouncing up against what you're pointing out there, Mark,
yeah, yeah.
a resistance level.
Well,
So
I'll show you
it,
where
yeah,
because you go back on these charts, and each one of these was resistance. You can see here, here we blew through those, and like getting up here. And why is this so hard to get by? Because we're getting near all-time highs.
Yeah.
You know, if you can blow past that and get an all-time high, it's around 109. You'll probably see this thing run. But right now, it's indecisive.
when you're looking at it and saying, okay, do I need to put a, you know, a trailing stop or a stop loss on this? Look at that. That's one way to look at it is support and resistance levels. And if you find your resistance level or support level, you put your trailing stop just a tad bit below it. So if it comes down to it, it holds up. And then if it goes through it on the sell side, then you get stopped out. But the trailing stop inches up with you if it were to break through resistance on the top side.
Let's look at MicroStrategy. MicroStrategy's been 4 days in a row hitting right here on this resistance level. Here's where it's going to open just below it. Again, Bollinger Band still rolling. You still got some sells above it. People are selling it. Sell orders at 439. But something's going to have to happen, and mostly it's going to have to be Bitcoin bouncing to get this thing to bounce past that resistance level. Okay. Now this resistance level used to be here where I had this circle. It moved up when Bitcoin, you know, had that big spike up. Resistance went up, and now we're waiting for the same thing. You see how it kind of went sideways or going sideways. We'll see. When I see the 9 come up and get close to the resistance, if this doesn't pop over, the more my experience has been as this gets up closer, it's going to pop, it's going to probably go down. And then you'll see the 9 go down like that. But we still have a little bit of time left to see if this thing will pop. You still have a Bollinger that's moving up on both sides. You're above the 200. You know, Bitcoin's just a different animal, and we'll see what happens, you know?
Can I point out something, Mark?
Yeah.
So what I'm reading or observing on SPX or the S&P 500, the last 2 days it's been trading above the 200, and I've been seeing lots of good volume. So, and I also have a watch list, a pretty extensive watch list, and all the I'll say, hot tech sector stocks have been moving well. Now, I'm starting to take a stronger position. I dollar cost average in on my stocks that I like technically and fundamentally. And I've been more aggressive, like especially like on companies like I'll say Meta or ones that I feel strongly about their company as well as the charts. So I guess what I'm trying to say is this looks to me as like a really good place where things are starting to come back. I should say momentum is going with some of these AI type stocks that I'm seeing. So I'm just putting a flag up, not a flag, but I'm just indicating that I've been seeing some really, really good gains on some of these AI plays. And from a technical standpoint, it's not a bad time to get in. You know, even Nvidia, I bought a lot of Nvidia earlier, the Monday and Tuesday, and it's like I stayed away from that company. But when I see the chart, I'm like, why am I not in it? And look at what the S&P is doing. So I'm just raising a little flag here that I'm being a little more aggressive on some of these plays.
Yeah.
That's all.
I think
And
one
I
thing
mean,
to take into account is that what has driven this higher?
I think
What
the
from
tariffs and the meeting with
the-
and the
yeah,
tariffs and the other thing, that big meeting.
headlines, headline news. Exactly. Why did that deal with China come together? One, the stock market has dumped since Trump has been in the office. His ratings have dropped, and China's in trouble financially. So they were both on the fence with their people who support them, and they had to come to a deal. So that was a headline deal that changed. It's a 90-day delay. Um, we came down, we still have 30% tariffs. They brought theirs down to 10%. Not truly a win-win, but a delay in the news. And so you had a pop and money flowed back in, volatility dropped. All your tactical funds have to readjust their positions, so they got a little bit more risk on. And now you're seeing volatility in the investable area, and you're starting to see accumulation of assets. Um, so take that into account. Mark posted on the Platinum Channel news channel that consumer household debt is up 167 billion, over 18 trillion. That to me is still a red flag. So I think, not Paul, I got a roof on NVIDIA of about $135 because there's a ton of cells up there. Just be careful. Be careful when you enter and just understand the market structure and why this is moving higher.
Always be careful. So
Yeah, and so
other thing I
I
mentioned
think
too is
that's where
the
risk
earnings have been
management
good.
really comes into it, and that's why you have a risk management process. As Mark has pointed out a number of times on this call, support and resistance. As I showed you, there's a way to calculate volatile trailing stops on volatile stocks. We're in an environment where you've had an enormous jump in everything. So just be aware of that, both from a short-term and long-term perspective.
And that's where I go back to my guidelines. Okay, this is what happened. Like we just said, the news came out on China over the weekend. Boom, up we go. So I look at this like, oh man, look at the video. I'm going to chase the video. Well, I'm not, because it's outside of the upper Bollinger Band. Now we're above the 200. That's really good. I like that. But am I confident that I should be buying where it only trades 5% of the time? I'm not. Okay. Now it's going to open up here, but we'll see where it closes. But again, like Paul says, if you want to trade the momentum, there's some momentum here. Definitely some momentum.
Well, and from a long-term perspective, you would really want that 200-day to be challenged. You want to see if that support holds up. And if it holds up over, say, a 2-day or 3-day challenge, then you got maybe a more of an intermediate to long-term opportunity there.
Meta has been
it's
trading.
it's one day above.
Meta has let's see, lots of
Several
days.
days.
Lots of days.
Yeah.
Yeah.
Yeah, and you
And
can't.
they just can't. The big thing with Meta right news-wise is their Meta AI advertising program is been launched, and it's pretty darn spectacular for a small or mid-sized business because it does everything for you. And we haven't seen that in the advertising. So that could really give Meta a leg up in this sense.
Tesla bump too.
So if you have conviction in Meta, that's what I'm trying to say. If you have a conviction in a stock, that's a to me is a great. It was a great entry point for me on actually Friday, yesterday. Well, Friday I buy a larger, not I buy the bigger position and then I dollar cost average in, and I will until this thing takes a turn. So I'm just saying, people are looking for ideas on how people
Yeah.
trade. This is how I
Just-
trade, and this one was an
yeah.
easy one. This is easy.
Just remember that this will only do this for probably 4 or 5 days if it continues up, and you still have resistance up here. But eventually, this price action is going to move inside of this Bollinger Band. So just keep that in mind.
Just using it as an example because I think people struggle on when to know when to pull the trigger, and I'm just saying statements on, hey, this thing's trading over the 200 for lots of days,
Can I?
and then I'm like, oh well, there you go. Sorry, go ahead, Margaret.
Yeah, I have a question. So I've been trying to get in Meta for a couple of days. I think I'm genetically frugal, so I'm putting limit prices too low. How do you do it, Paul?
So when I see, like, I'll say, was it Friday? I had this through the weekend. When I see the trend and I like the stock, I just buy it. I don't wait.
Okay.
A lot of, I don't, and I'll tell you this, I'll sell it in a heartbeat too.
Yeah, well, I put limits and all
Yeah.
that as soon as I get it, but it's getting in sometimes that I struggle with.
If most of the time I have conviction, I'm more of a momentum trader, and I just buy it based on the way that price action is compared to the S&P.
Gotcha.
So
So you
I
just put
always
a
keep
market price in?
I
Like,
just buy it on the dime, and I'll cost average on the dime, and I'll try not to do it in the morning, but that's when I usually do a lot of my trading, because
in the
during the
mornings,
day,
now they're jumping up so much the first thing, and then
yeah, you got to wait for a little while. But to your point, stocks that I look at, I know that swing trading is a little bit. Yeah, I see that I have conviction, and I just flat out buy it, like because then I sit there and I'm waiting for it to hit a specific price point, and I don't have the time to do that.
right.
Where I have 30
Yeah.
stocks,
Yeah.
I'm just saying, oh, that looks good, I'm in it. Or if it starts to pull, do sideways action, I'm out. Even if I take a loss, no problem. In, out. Don't have time to
Yeah,
nickel
I
and dime
have
it.
that. Once I get in, I do it very similar to what you do. It's just sometimes I struggle to get in. So
Yeah,
I
but
might
what
have
happens is now
pull the
Meta
trigger.
goes up. Meta goes up, and you're like, oh, didn't get in yesterday, didn't
Yep.
get in the day before, didn't get it, so I stopped doing that.
Yeah, I gotta try that too.
I follow trading guidelines, and that's what I blame all my wins and losses on. Well, the wins I blame on me. I take credit for. The losses I blame on my trading plan.
I think what's great about that is, like, I'll say is that Monday I took a loss on ODD, like $1,000. But they didn't feel too bad. I didn't feel bad. I was like, oh man, I got screwed. But that's part of this thing. Part of this dealing, part of what's trading in the market is you're taking risk, and you're going to have some stocks that just go nutty on you. So you get out, and I didn't feel bad. Like, usually I'll feel a little bad. I'm like, that's okay. There's so many other options. I'm making it up more than making it up on other things. I'm doing well, I'll say. But this happens. What are you going to do?
Hey guys,
Yeah.
we're at guys and gals, we're at 8 or 8:30 Central, 9:30 Eastern. We're gonna wrap it up here, and we'll be back tomorrow at same time, same place, and we'll go from there. So, Mark, you got any last words or anything?
Yeah, someone wanted to look at the gold chart here, so let's just pull that up real quick. Gold has just been pretty much sideways. Look at the 9 sideways. Look at the resistance level. Gold just pops if the market does well, gold goes down. If the market does crappy, gold goes up. But since about April 16th, we've just kind of been in this pattern. It got a little bit above the resistance level, but we're still trading below. You look at the oscillators are bad right now on gold. And again, gold is something most people hold on to as a store of value as opposed to trade it, but they do trade it. But you can got a lot of gaps in gold. You can see gap, gap, gap. It's it's bouncy, too bouncy for me to be trading in gold. You know, there's too many gaps. I like more order. Someone had this one. When I say order, I mean step up, step up, step up, you know, instead of gapping all the time. This is ACLS. You can see it came back within the Bollinger Band. 1, 2, 3, 4, 5, back in. Okay, so your next level, you got some cells about 65, 64, and then resistance above that. But it's your next level of resistance is about the Bollinger Band, and then this level here. So if you're in that, you know, just be aware of where your support down here and your resistance up on top. I think I got everybody. Trying to keep up with everything. Anyone have any opinions on Tesla momentum? Sorry, someone had a question. I don't hear any. I'll put the chart up real quick. Tesla for me is going to open here. You've got resistance right above here, 348, and then you've got some sell orders at 355 again. This is my hard line in the sand. We're on the upper Bollinger Band 3 times in a row. Normally you'll come back inside, and we might see a hit up here.
Peace, guys.
Unless something really pops, I think it's going to hit and go sideways until we see something else pop. That's just what the chart's telling me right now. Okay, sorry, Trent. I think
no
I got
problem.
everybody. I try to get everybody before we go so they don't.
No worries.
All
All right. Well, thank you all again, and appreciate you and y'all's participation. We'll see you tomorrow, and have a wonderful week, or wonderful day, and wonderful week.
Thank you.
Later.
Hey guys,
All right.
Thanks.
thanks for participating. Appreciate it.
Live loud.